Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. It's been a while. I have not forgotten about y'all. I have been uploading videos. I had left the Rule Symposium. I'm still uploading videos from that. Have a few more interviews to upload from that. But today we're going to get into some charts. We're going to look at, is the stock market going to crash if the Fed cuts rates next month? We're going to look at what implications that has for the markets and such. And so we're just going to get into few of those things. And then if you have any particular companies you want to look at, as far as on a technical basis, we can look at it. So I'm going to go ahead and kick the intro. Shout out to all the new subscribers that I've gotten over the last couple of months. You all haven't seen me live yet. So I'm happy to be here with you today. So let's go ahead and get into the intro, and then we'll be right back.
Think, act, and prosper. You are now tuned into the Money Level Show.
All right, everyone, we're back. I hope you all are doing well. If you are watching, be sure to drop a comment in the comment section. Love to hear from y'all and see how you all are doing. I know that I've been uploading some videos, but I haven't been live, and normally I will engage with you all in live time when I do go live. But however, I'm here today, so I hope that you all are here. I hope that you all enjoy this and gain some value from this. So one question that continues to come up is, if the Fed cuts rates, what is going to happen to the markets? So there's a lot of different competing narratives in terms of what is going to happen, right? Some people are saying, oh, they can't let the market crash before the election. I've been in that camp too for a while, but I'm also considering some other information, some other historical information in terms of like, okay, is the market topped out right now, and then is it going to be bearish for a while? So that's what we're going to look at. I mean, obviously, we had a huge drawdown this past Monday when we saw the Japan carry trade pretty much happen. And so, if you don't know what that is, pretty much Japan, the Bank of Japan, they increased their interest rates. They haven't increased interest rates in a long time. And so people would borrow yen at 0% interest rates, and they would go and buy other assets that would pay them a yield. So let's say if you bought the yen at 0%, and then you went and bought treasuries and got US treasuries and got 5%. So then when the Bank of Japan pretty much increased their interest rates, even though it was by a little, they pretty much closed the gap a little bit between obviously where the US has our interest rates at, and then they increased theirs. So that caused a big move in the markets to where people got out of other trades, and they began to see the Japanese yen, start to spike in price. You had big sell-offs in the markets everywhere. I think South Korea's market had to shut down for a day or so. Brokerages were having issues. So that was a big catalyst to see, like, okay, are we going to see the markets crash? And I thought that was the crash. I texted my cousin that night and I said, hey, this might be the crash. It's going to be a huge sell-off in the morning. Sure enough, it was a huge sell-off, but people bought that sell-off right back. So we saw some of the commodities go down significantly and stuff, and people bought it right back. So we're going to actually jump into some charts here and let's look at that. Let's just go look at that and just see what happened, and then we're going to get into what happens when the Fed cuts rates. So I'm gonna go ahead and share screen here. This is what we're going to do first. Let's go ahead and look at, all right, here we're looking at the SPY. Let me go ahead and adjust my screen. All right, here we're looking at the SPY, and as you can see, this is if you don't know what the SPY is, this is the ETF for the S&P 500. As you can see, it had a big breakdown. We're looking at the daily chart here, so I'm just going to zoom in, and I can move this stuff, but this is pretty much the Ichimoku cloud, which shows like support and resistance. And as you can see, whenever the stock price is trading above the cloud. It's bullish. Whenever it comes down into the cloud, it gets bearish, and then as you can see, it gets bullish again. And then this matches lines up with the TTM squeeze, which shows when there's buying pressure or selling pressure on the stock. Same thing with RSIs, and people use different indicators to show that. So just don't let this confuse you. So as you can see, the S&P, had a big sell-off, and we had a huge sell-off and a buyback. I mean, it came down as low as about 510, between 510 and 515, and then it bounced back. It bounced back to 533. And so the question is that just a dead cat bounce, and it's going to go lower? I mean, if we were to draw some, let's see, if we were to draw some lines here, let's see if we draw some resistance lines. Let me move my menu over a little bit. Let's draw some zones. All right. So we're going to look at some zones here. So if I were to look at recent price action and I wanted to draw some zones, as you can see here, this is a zone on the daily. I mean, this is a zone right here. So as you can see here, you had resistance, came back, had resistance, broke out, went above, came back, came back down, hit that resistance zone again. So, I mean, you could use that as a resistance zone. Obviously here, this gap down, it just sold through the resistance zone here. This would have been like the next level of resistance, just sold through it. But we actually, let me see if I were to draw another, let me draw another resistance zone, support zone here. It's actually resistance now. So if I draw a zone here, as you can see on the daily, it's hitting this resistance zone again. We have to see if it's going to break above and go higher or what. But it's hitting that again. And so, I mean, is the market going to break down? We're going to see this next week for sure. I mean, and that's just looking at the daily. If we go over to the weekly, let's see what the weekly says. Obviously, it has a long way to go. If you're looking at the weekly chart, I mean, you have a level of support here. If you were to draw a zone here, 460, that's on the weekly. You have a level of support here at the 495 area. And then obviously this could be a level of, let's see, it would be a breakout right now. I mean, this would be the next level of resistance. It broke through on the week. So, yeah, so it still remains to be seen what's going to happen. But I mean, if we zoomed out on a longer time frame, I mean, as you can see, that's a big sell-off. So even if we were to, let's see this. Let me see if I could draw a channel here. All right, here we go. Boom. Yeah, let's leave it there. I mean, you have this channel here. If you want to look at the channel, and obviously this is like 495, so the S&P will have to drop another. The SPY will have to drop another $30 to get here. But it remains to be seen if we broke in just this particular pattern. So yeah, so we had a big sell-off and everything, and yeah, it's kind of interesting. I hope that you all are seeing this. Let me make sure. Who's still with me? If you're watching, drop a comment. All right. So let's go ahead and look at some of the commodity stocks. I actually went and scooped up some uranium this past week. I hope that you all were able to grab some as well. Let's see. I actually bought some of the big caps. We had CCJ, Cameco, had a significant drop. I mean, it dropped to like $35. I mean, ever since June, I mean, June it was trading at $50, and then it dropped down to 35. So I actually scooped some up there. So as you can see, I mean, just that was a good buying opportunity. I mean, it's still a good buying opportunity, but it remains to be seen if it's going to go any lower. I was also able to grab some URNM, the spot ETF, or I mean, the Sprott ETF. This had a big sell-off. I mean, it hit over $60 back in May, sold off. I mean, it hit $37. We haven't seen these prices for a while. So these are some of the pickups that I've been picking up as of lately. So as we can see, I mean, just the market had a big sell-off, and it remains to be seen if we're going to continue to sell off any further. I don't see any confirmation yet in terms of like, oh, if we got a breakout for new all-time highs or whatnot. So let's go ahead and jump over to, I'm going to jump over to another screen. This is we're going to look at Investopedia, because they talk about how interest rates affect the stock market. All right, so the impact of expectations. Okay, nothing has actually happened to consumers or companies for the stock market to react to interest rate changes. Rising or falling interest rates can also impact the psychology of investors. When the Federal Reserve announces a hike, both businesses and consumers will cut back on spending. This will cause earnings to fall and stock prices to drop, and the market may tumble in anticipation. So this is when the Fed raises rates. On the other hand, when the Federal Reserve announces a cut, the assumption is consumers and businesses will increase spending and investment. This can cause stock prices to rise. If expectations differ significantly from the Federal Reserve's actions, these generalized conventional reactions may not apply. For example, suppose that the Federal Reserve is expected to cut rates by 50 basis points at its next meeting, but they instead announce a drop of only 25 basis points. The news may actually cause stocks to decline because the assumption of a cut of 50 basis points had already been priced into the market. So as we can see, it kind of depends on varying factors if the Federal Reserve, what the Federal Reserve does, and if it's going to be bullish for stocks or not. So I want to go over to this chart here. This is something that I've been actually wanting to look at. And this is the federal funds rate versus the S&P 500. As you can see, whenever the Fed starts cutting rates, the S&P sells off. So obviously, I mean, it's hard to see, over here, when rates were significantly higher. But as you can see, since the market became more financialized, especially in the 2000s, as you can see, the S&P, I mean, it's trading at $1,400. The Fed funds rate was at 6.5%. They start to cut rates. The S&P 500 falls to about 50%. As you can see, I mean, it goes from 1486 to about 829, something of that nature. So, I mean, it goes almost down 50%, 40 something percent. But, obviously everything else got impacted too when you look at this, because you had the tech bubble and everything. But you can see this pattern of when the Fed started to cut rates, that the market started to go down. So then, when the market bottoms, it goes up again. So the stock market bottom 2003, it goes up again up into 2007, 2008, right? It gets up to 1553. So the S&P took a while to recover. I mean, it barely got above its all-time highs back in the early 2000s versus the 2007, 2008 timeframe. And then the Fed had raised rates going into 2008, 2007. and then they began to cut rates late 2007. And as you can see, the S&P goes from 1500 plus, close to 1600, down to 827. So I mean, you had almost a 50% haircut. So as you can see, when the Fed starts to cut rates, the market goes down, and it takes a while for them to really get it back going. I mean, you can see this going into 2020, COVID, right? You got S&P going up. I mean, you had a drop here. And then, as you can see, the Fed starts cutting rates into COVID, and you see the big drop, and then the Fed cuts rates significantly, and you see they cut it to zero pretty much, and you see the S&P just spike up significantly. Then the Fed starts raising rates, S&P goes down significantly, and then as the Fed is raising rates, continues to raise rates and pauses, you can see just a huge spike. So, I mean, this is really just, looking at this chart for me, I think that, when the Fed cuts rates, it may not be as bullish as people think it may be. Obviously you have, people that are saying, okay, well, it's going to be cheaper money, more people can invest and such. But I would just suggest having some dry powder on hands. I have about 30% of my portfolio in treasury bills and treasury ETFs, pretty much short-term treasuries. So getting 5%. I have some money on the sidelines and some dry powder to be able to take advantage of some of these market declines. I mean, the market is obviously, you can see here from the S&P 500 chart that it's up significantly. And we had a pullback, and many people are expecting it to go higher, right? I think at some point, the rate cuts will have less effect on the markets, but the initial cuts may have a drastic effect. And then right now you look at the political climate in the US in terms of, like, we don't really have a president in office right now. You got an election coming up. People want to see what happens when the dust settles and who gets elected and such. And is that going to be bullish for equities, or is it going to be bearish? Is it going to be bullish for certain policies and such? And so, there's still a lot of things that have to be sorted out, and a lot of dust that has to settle. And so we could see this market, really, really take a tumble. However, before we make that conclusion, I do want to look at another factor. We're going to look at election cycles, and we're going to look at the markets. So just give me 1 second. Let me pull up the charts. Let's look at election cycles and see what happens during that time frame leading into election. All right, here we go. Share screen, boom. All right, so we're looking at the SPY again. I'm gonna hide this. All right, so we look at the weekly. Let's go back to, I'm gonna take some of this off. There we go. All right, so last election cycle obviously was in 2020. I don't even know if we can really fully factor that one in, because the Fed had rates at zero. There was still a lot of quantitative tightening and such, but you do see a small sell-off here. So if we look at, the S&P here, the SPY, we look at the ETF, the SPY peaked out at 359. This was in August of 2020, going into the election of that year. And then you had a big sell-off, September 21st of 2020. It goes from, I can't really call it a big sell-off, but it goes from 357 down to 320. You get a bounce, and then you get another sell-off back down to 320. This is all in October. And then November, election's over, you get a pop, a big candle up, and then it starts to run again, right? So as we can see, there is some turmoil. If we look in this area here, This is from August to September, August to November. You can see this choppiness. It goes up significantly. August 31st, drops significantly, bounces back, drops significantly again. Then when the dust settles after the election, it starts to run. So let's go back and look at some prior years. So the year before that, election before that was 2016. So let's go ahead and look at that. All right. Here we go. All right. So as we're looking at 2016 here, I mean, it's not really indicating that there was a lot of sell-off pressure in the markets here. I mean, you have going into 2015, you had a decent sell-off. I mean, from the SPY was at 211, sold down to 181. And then, I mean, this is January of 2016. So this is the election year. It starts to go up. And then as you can see here, I mean, August, you got the SPY at 218, sells off to, 208, which isn't that much of a decrease, right? And then after the dust settles after the election, it starts to skyrocket again. So let's go back and look at, I think the last year before that was 2012. Let's see what it did then. Okay, so we can see here, we see some action here. 2012, SPY was at 148, sold down to 134, which isn't too much of a decrease, right? I mean, that isn't too bad. But the dust settles, election's over, it starts to run up again. Let's go back to 2008. Yeah, well, I mean, I don't even know if we can factor this in because this is the global financial crisis, right? I mean, 2008, right? Election year, September, September. I mean, the SPY was at 156 in 2007, October 2007. You get a year later, August, it's down to 130, and, this is like 2-3 months before the election, you get a huge sell-off. I mean, it goes down to $84. I mean, and right before the election. Then during the election, I mean, it's at 82, and then it goes down even further to $66 before it starts to even rally back. So, I mean, just looking at some of these cycles, I mean, if we go back to 2004, right, election cycle then. So yeah, I mean, it's like hit or miss. I mean, looking at the SPY, I mean, we can go over to the QQQ and see if there's anything different there. Obviously, QQQ has a lot of tech companies and tech names in it. So let's see if the QQQ does anything different. So let's look at it. Got a big sell-off here. This is going into the election year. All right, let's see where we at here. All right, so this is where the QQQ is now. All right, got the sell-off and the pop back. Let's see if it goes back down. All right, here we go, 2020. August 2020, peaks at 302, heads down to 269. I mean, it gets as far as 261. So, I mean, the QQQ dropped $20. I mean, $100. No, not $100. $40. In between that time, in between the election, it starts to rally back, struggles, then gets another pop. Let's go back to 2016. 2016, I mean, you don't really see that same type of behavior. So it seems kind of inconsistent, when you're seeing the behavior of the market going into an election year. I mean, if we go to 20, okay, so here's some action here. September 2012, QQQ $70 goes down to $61. I mean, it's not too bad, but then in the election leading up to election, it sells off though. 2008, obviously, that's you're gonna see a huge sell-off. 2008, that's consistent across the board. No one escaped that one unscathed. And then you got 2004. Right, 2004 election. You get a sell-off before it. You get a run up. You get a run up into the election here. So, I mean, you can't really. It's not really consistent, in terms of like using that theory. I mean, you get sell-offs, you get pumps and everything, so it doesn't really seem consistent. So it's good just to remain nimble. Let's just look at the gold chart really quick. Just want to see what the gold chart looks like. All right, gold struggling up here, 2,500. Still hasn't closed above 2,500 yet. It's past it mid intraday, but it has not closed above it. So it's still meeting resistance here. Then obviously this is like, if we look at the monthly, this is like the highest it's ever been measured in dollars. So still struggling to get above that 2,500, but it still remains significantly elevated. I mean, if gold were to fall, this would probably be the next level I would look at, 2250, and that's in this range here. And then obviously, going back to previous zones, I would probably have a zone here over 2000. I mean, obviously it hit 2000 multiple times here. I mean, this is way back in 2008, I think. Looking at the weekly now. So yeah, if I were to, I mean, this is the floor pretty much for gold. $2,000. That's like the ultimate level of support. It's hit there multiple times on the weekly. That's probably a big level of support. I don't know if it'll go down that far, but right now we're in like kind of uncharted territories. But this does look like a bull flag. If I was to draw it, let's see. Let's draw a bull flag. Oh no. Sorry, y'all. I'm still getting this thing. Trend line. Here we go. Bull flag. Boom, boom. And then let's go here. Here we go. And let's go here. I can't even really see inside of this, but it looks like a bull flag to me. You got a sharp price rise. It's been chopping in between this range for a while. And, I think it could break up higher. So I don't know where it's going to break up higher, but that looks like a bull flag to me. So, yeah, that's gold. That's gold. All right. Well, yeah, I appreciate you all for tuning in today. I hope that looking at some charts is helpful. And I see that you all don't have any stocks that you want me to look at, but that's all good. I'm going to get going. Appreciate you all for chiming in with me today. Y'all stay blessed by the best, and we'll see each other soon. All right. Peace.